Hey everybody, welcome back to Grain Markets and Other Stuff. Thank you for joining me. It is Wednesday, February 17th. It's about 12 p.m. Central Time as I speak here today. Kind of a quiet day in the markets. I guess we had a little bit of volatility in the wheat. Thank you for coming back. Those of you listening on the podcast, thank you for listening. Those of you watching on YouTube, thank you for watching. Remember, if you guys like these videos and you're watching on YouTube, make sure you hit the like button and make sure you subscribe to the channel if you have not already. That would really help me out in regard to YouTube, their algorithms, how all that stuff works. It helps them to spread these videos around a little bit. If you're listening on the podcast, thank you for listening. Make sure you leave me a review on the Apple Podcast app in particular. I could certainly use some more reviews there, and that would be much appreciated. If you have any comments, good, bad, ugly, I'd like to hear all of them. And remember, as always, guys, if you need some help with your grain marketing, or you just like to know what's on my mind every single business day, go to my website. It is www.standardgrain.com. You can go to that website and click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, this is a deal that's billed automatically to your credit card through PayPal, and you can cancel it at absolutely any time. There's no obligation. I'll send you my morning email. I'll send you my text message service, and you'll be made aware every morning at 6:30 a.m. Central Time of all the overnight headlines, any sort of grain marketing advice or recommendations or thoughts that I may have on my mind that day. There's an optional text message service that goes along with that, no extra cost. And then if you need some consulting, I spend a lot of time talking to people and subscribers about certain cash contracts or certain situations. I'd be happy to help you out there too. What I wanted to do today was essentially a quick chart review, and I haven't done one in a while. And I guess that the question that a lot of people have asked, and that I've kind of asked myself too, is, do we still have uptrending markets? Do we still have bull markets intact in regard to the corn market, the soybean market, and the wheat market? And the answer is probably different depending on who you talk to. The one thing about charting and charting any given financial instrument, whether it's corn, soybeans, wheat, the S&P 500, gold, silver, cattle, whatever. Charting is more of an art than it is a science. It's very subjective. You could give two traders the same chart, and they may draw totally different conclusions, just the same way that you may give two painters a blank canvas and tell them to draw a picture of any given object, and they may draw them in two totally completely different ways and come to different conclusions. So charting is more of an art than a science. It definitely is. There are different people that will look at these charts and give you differing opinions on the charts and what they mean. I tend to keep things as simple as I possibly can when it comes to charting. I may do a whole episode on charting and how I like to do it, but what I'm going to look at here for corn, soybeans, and wheat very briefly is kind of the trends that have been in place since August. And I would make the argument that the market, this grain complex, corn, soybeans, and wheat, it bottomed back in August. And what we've done then has been move higher. So I guess the question that I seek to answer here today is, does this uptrend remain intact? And what are some targets or areas that perhaps we should be aware of? Where I'm going to start off here is in Kansas City wheat, and I wanted to do the HRW wheat instead of the SRW wheat. It tends to be the market that I track a little bit more closely. I have a lot more customers that grow HRW wheat. But what you can see here is that the market bottomed back in August, and we had kind of what I would call a secondary bottom back in December. And that's how I have my trend line drawn here, is from that August low through that December low. And what you can see here that with the board in the 620s here today for the March Kansas City contract, that uptrend has not been busted. We've been sideways. We've consolidated here as of late more than anything. But the uptrend that began in August and continued through November, December, January, it hasn't been busted. The reason that we were able to move lower or sideways to lower and not bust the trend is because the trend became so exaggerated in December and into January. It kind of got ahead of itself a little bit. So it enabled this market to come down and set back and consolidate while still maintaining that larger trend that's really been in place since August. Some key levels to look for here in the March Kansas City wheat contract, in my opinion. I think 604 is a big level. 604, we've got kind of a double bottom there. We bottomed there once on, I think, January 25th. We bottomed there again on, I think, February 3rd. So if we were to crack below that 604 level, then you've got a chance to come and test this trend line, which moves higher every day. But today it's sitting around, what, 590 or so. So that's kind of like your big zone of support here should you see selling accelerate in this March Kansas City wheat contract. The 604 down to, say, 590, depending on the day. And like I said, that trend line, my version of it at least, and everybody will have a different looking chart when it comes to this. My version of it is going to say that we've got some support in this 604 down to, say, 590 neighborhood on a day like today. Your big resistance area is very obvious. It's that contract high up at 660 that was posted in mid-January. The next chart we're going to go to is soybeans. This is the March soybean chart. And very similarly, we posted what I would call a significant low back in August. You have a couple different ways you can draw this trend line here. There was one kind of secondary low in October that I use on one of my trend lines here, and then another one in December. So there's a couple different ways you can draw this depending on which way you want to look at it. I would make the argument that your initial support area would be this upper trend line that I'm looking at on the chart here. And if you're listening on the podcast, I'll explain this the best that I can. But this area around, say, 1340, maybe 1330, or I'm sorry, 1340 to 1350, I think is a big area if we can hold this sort of support area right here. And then if you get below that, you could go down and test maybe the longer standing trend line, which is the one that began in mid-August, runs through that late October, early November low. And that really doesn't come into place until you get down into that, say, 1250, 1260, 1270 neighborhood, depending on the timing, of course. The thing about trend lines is that they're always moving, which means that every single day they're in a different spot. The support levels that I'm talking about here are rising every day because the trend line is rising consistently. In terms of resistance, just like in the wheat, I would argue that the contract high at 1436.5, which was posted on in mid-January, that's your big resistance area. And yeah, it's 50 cents and change away, but that's really not a whole lot in this sort of market. So I really think that you could have, certainly more than $1 to the downside and still say that we're in a bull market, grander scheme of things. I think that that's very possible in the beans. And I think that, of course, to the upside, you've got to get through that 1436 contract high. That's your big hurdle. So those are some numbers maybe to keep in mind here short term. Let's go to the March corn chart. March corn is a little bit different, but similar in a lot of ways. I mean, the similarity between the three is that you had that August low, and that's the same in March corn as it was in March soybeans or March Kansas City wheat. You then had kind of what I would call a secondary low in the corn market back in December. We saw a lower to sideways trade for a couple of weeks, and then it was really off to the races, and the trend actually accelerated. So I've got, kind of like I had in the beans, I have two different trend lines here. One of them is a more longer term trend line. That's the one that begins with the August low, goes through this December low. And then the other one actually doesn't begin until mid-December and then kind of comes through. This would have been a low from, let's see, late January, and then even through that low from just earlier this month on February 11th. So I'd make the argument here in the case of March corn, your first resistance area, your first support area rather, below the market. Remember, support is always below the market, resistance is above the market. Support area here initially comes in today at 535 or so, and that's a number that's going to rise 2-3 cents every day. That's your kind of initial support area in terms of this trend line. And you could also make the argument that this low here from February 11th, which was 524 3/4, that's a little bit of a support area. And again, there's a million different ways you can take this canvas that is the chart and manipulate it and find support levels, resistance levels. Nobody's charts are the same. When you get down below those levels, like say you get down below that 524 level in this March corn contract, I mean, you could go all the way down to this lower trend line here, which doesn't come in till about, 463 today, 462 or 463 today, and still maintain an uptrend. So you could, in my view, this is my opinion on the chart. You could take March corn futures all the way down into the 460s while still maintaining an uptrend. So I'm talking like you could have a 90-cent break here, almost an 80 to 90-cent break, and still be in what I would call an uptrending market. It would really be a breakout below this longer standing trend line that would really be a game changer, in my opinion, in regard to the trend of the market. And in corn, very obvious resistance area above the market. Again, resistance areas are above the market, support areas below the market. 574 and a quarter was the contract high, which was printed on February 9th. That's your big hurdle. And then once you get through that, you could talk about, the potential for additional upside in the market. I know this was a quick chart review, but I wanted to kind of give you just the lay of the land here in terms of where we stood from a technical standpoint. I would certainly make the argument, my opinion is that, yes, in fact, the uptrends do remain intact, corn, soybeans, and HRW wheat, based on the way that I view charts. There are other people who view charts differently who might tell you something different, and that's what keeps this interesting. It's just like opinions in the markets. I mean, there's always going to be a bull, there's always going to be a bear, and charts are kind of the same way. I could draw you bearish looking versions of these charts too, using different time frames, using different metrics, all sorts of different stuff. But this was my kind of basic view, going with the idea that we saw kind of a significant bottom back in August. We've been trending higher since, and we haven't really done anything to bust those uptrends. If you guys have some questions, shoot me an email to info@standardgrain.com. You can drop a comment in the YouTube video. I would be happy to respond to it. Everybody have a great day. I'll catch you a little bit later.